leaving the UK, and when I say leaving the UK, I mean essentially breaking your UK residence and going and living somewhere else, is effective. Leaving the UK. Yeah, I've been asked to do a video on leaving the UK and tax, I guess. First and foremost, it probably goes without saying that leaving the UK, and when I say leaving the UK, I mean essentially breaking your UK residence and going and living somewhere else, is effective for tax purposes, limiting your exposure to UK taxes. But I think there are a few points I'd like to make on that. Firstly, it's perhaps not as easy as you might think. And secondly, there are a number of pitfalls to look out for. But let's firstly look at why it matters. If we look at a UK resident and domiciled individual, broadly speaking, they will pay taxes on and pay UK taxes on their worldwide income and gains. Relatively straightforward position. But if we can manage to become non-UK residents, then our exposure to taxes is reduced. So, for instance, for capital gains tax purposes, it's a relatively simple tax. That if you are a non-resident individual, your only exposure really to UK capital gains tax will be on direct and indirect real estate that you own. So if you're selling real estate that you hold directly, or say you're selling shares in a company that holds a property, then you will remain within the scope of UK capital gains tax. From an income point of view, then you will only have an exposure to UK source income. However, there is one really useful exception to that, that a non-resident person, generally speaking, will not have an exposure to dividends paid from UK companies. So that's all wunderbar. Important to note that because inheritance tax, at the moment anyway, inheritance tax is based on domicile. So the fact that you have become non-resident, certainly in the short to medium term, will have no effect on your IHT exposure, and that you are UK, if you're UK domiciled, you will have a UK inheritance tax exposure on worldwide assets. That's not going to change. So what are the pitfalls? Well, the position that I've outlined already ignores a very, very important caveat, and that's the temporary non-residence rule that applies for both capital gains tax and income tax. And for capital gains tax purposes, the way it works, that if you own an asset at the time you depart and you sell that asset whilst non-resident, so under basic principles there's no capital gains tax liability at the time you sell it. Well, if you come back to the UK within 5 years, then that capital gain it resurrects itself like Lazarus, or if we're going to use some more up-to-date terminology, like Deadpool, and is taxable in the EU you come back. There's a similar rule, but a more limited rule that applies to dividend income as well, that sometimes income, specific income which applies to entrepreneurs who become non-resident, if they say they get a dividend from their UK company which relates to profits which arose while they were UK resident, and they take that dividend whilst non-residents, but come back within 5 years, and that dividend becomes taxable. But as I say, that's the income tax rule is more limited than the capital gains one. The second pitfall is around, or what I call out of the frying pan syndrome, in that you may, by becoming non-resident, escape UK tax, but you need to think about where you have subsequently become resident. This tends not to be an issue if you've thought about it. So if you're in Dubai or you're in Monaco, then you're probably in a fairly sort of benign place for personal taxes at least. But if you've gone to Paris or you've gone to New York City, then you know your situation probably hasn't improved a great deal there. So in short, becoming non-resident might be very attractive from a UK tax perspective, but 5 years is a very, very long time. So be wary of the temporary non-residence rule for capital gains tax and income tax. It makes becoming non-resident for tax purposes a much more onerous exercise, so probably only really wanting to contemplate if you want an adventure overseas, go experience different culture, different country, or say your capital gains are so big that it makes that upheaval worth it. Also, you need to think about the new country where you're going to live carefully as well, and make sure that you're not going to get stung for any taxes there. But I think that kind of wraps that up for now. Hopefully that was useful. Hopefully I have scratched the itch around leaving the UK. But if you have any comments or any observations, then just pop them in the comments below and I will happily come back to you. But for now, thank you very much.